All right, so what's in my stock market portfolio with Questrade? So right now I'm sitting at 105 total equity, 105 Canadian. So from last week it went up probably 1K. So in my margin account, I've got 4,600 cash US. And if we look at my positions, I've got a bunch of put spreads. I've got one naked put on Neo, and I've got a naked put on Tattooed Chef. So I basically sell options in my margin account. That's it. So it's all credit strategy. So it's all money that comes in. When I sell options, credit comes in, so it doesn't really affect my cash in terms of paying interest because my cash is always above zero because it's actually money coming in. The only time it would go below zero is if I'm collecting, let's say, $1 on a credit spread, but then I end up spending $5 to close it. And in that case, my cash would eventually drop below zero. All right, so I've got this Amazon put spread that I'm not able to close yet. It's not decaying fast enough because I went to January 15. I should have done weeklies. I've got Baba put spread that I just keep rolling because I'm worried about it. I had a 250, 240 put spread for December 18, but I didn't like the fact that it was 10-point wide, so I decided to roll it to February. I had to go up, but I lowered the width. I decreased the width of the spread, so I went from 10-point to 5-point. So therefore, I reduced the risk. I went 5 points higher, and I had to go to February 19. So as long as Baba's above 255, then I'm okay with this trade. And I don't even think I make money on this trade. This is just a trade that I'm trying to scratch to avoid losing. Then I've got Beyond Meat, January 15. I've got a 120, 115 put spread. Once again, not able to close, not decaying fast enough. So similar to the Amazon trade. I've got two CRM put spreads that I'm still not able to close. This one's January 8th. This one was rolling from previous earnings. So I'm just trying to save. This one is a new put spread that I entered after earnings, after CRM fell. So I went to January 15, 195, 190. This one should be a winner, hopefully. I think I collected $1, a little bit less, 95 cents. Then I've got a naked put on Neo, January 15, 30 put. So I went pretty far. But Neo keeps dropping, so my put is losing money right now, losing $27. I think on Friday, the value of my put reached $2. So I was actually losing $80 on this naked put. But I can always roll it down, roll it further. So I'm not too concerned, but hopefully nothing crazy happens and it doesn't get delisted or anything like that. NVIDIA, I've got an NVIDIA put spread. So this is an old put spread that I'm just trying to save. I just need NVIDIA to stay above 480 come December 18. This expires worthless, and I don't make money or lose money, but I saved a big loss. I would have lost, I think, that week. If I didn't roll this straight to December 18, I would have lost, I think, like $300. So I'm basically just rolling it to save $300, but I don't make any money on this. Square is a put spread that I entered this week, December 2nd. Should be a good one. It's already somewhat profitable, close to 50% profitable, but not yet. But it's got a January 15 expiry. I went with a 170, 165. I've got a Visa put spread January 15. So you can see I've got a lot of January 15 expiry. I don't know, I felt like trying out 45 days. A lot of people are telling me 30 to 45 days is better, safer, but it's kind of annoying me because the stock's moving up slowly, but I can't close the spread yet because the option premiums are still high. Either volatility is going up on them, but I'm pretty sure I entered them with high volatility, but yeah, I'm not able to close them yet, so that's kind of annoying to hold it so long. I got used to doing weeklies where I can close them in like 2 days usually, if the stock doesn't move or goes up a bit. So anyways, I've got Visa and 195, 190, put spread January 15. I've got Vmware. This one's not doing so good. I don't like this one at all. These were bad trades. I've got two of them, but they're 5-point wide. I've got December 18, 140, 135. This was an earnings trade that went bad. And then when the stock dropped after earnings, I decided to get in on the new drop because after it drops, I like to sell put spreads, right? So I sold another one, but this one I went to January 15, 130, 125. And they're both, I can't close any of them yet, but hopefully they could still be winners, but it's too close for comfort. In my TFSA, nothing changed. I still have my dividend stocks and I have just gold that doesn't pay dividends. It came back up a bit, gold, so that's good. But I've got Bell, Bank of Nova Scotia, Choice Properties. It's funny though, these dividend stocks, they're profitable. They've appreciated a bit. Sometimes I'm tempted to sell them and just take the profit. I mean, look, 126, 267, 208. That's tempting for me. I wouldn't mind taking the profits, but I'd be giving away the dividends. So my plan initially was to buy them and hold them for life just for dividends. And even buy more of them if they drop. So Bank of Nova Scotia, Choice Properties, Gold, Manulife is a good one. Magellan, Midstream Partners This one, I was actually going to sell this one at like 38. And look at this. It's at 44 now, $200 profit. And this is in US, I believe. Yeah. Realty Income, Pizza, Ryokan dropped actually this week. It had over $300 profit on this. Now it's only 267. So Ryokan dropped. I think someone told me that their dividend dropped 30%. I've got AT&T and I've got TD. So that's my TFSA, all dividend stocks. I'm ready to put more in if I see any good opportunity. I could also do stocks with just general growth or capital appreciation. It doesn't have to be dividends. But what I want to do in my TFSA is just buy $1,000 chunks of good opportunities. That's it. In my RSP, I've got Oaktree, which is a SPAC that is going to merge with Hims and Hers. Also, subscriber gave me this one. I liked it, so I just bought it, but I only put in $1,000, so not that much risk. And I've got two covered calls, Rocket and Virgin Galactic. I had work, but I had to get out. I had to close it because the stock just kept flying, so there was no premium left. There was no extrinsic value in my call option. It was deep in the money, so I got my capital back. So I collected some premiums. The total premium that I actually collected from Slack is, if I just zoom out, so I collected total premium of about $300 US. So obviously, if I just bought and held, I would have been better off. But I didn't know that Slack would fly. So I still collected $300 on a $2,800 investment in exactly 1 month. So that's a 10% return in 1 month, which is not bad. You can't complain with 10% in 1 month. But the problem is, can you do that every month? Can you find an opportunity, even with covered calls, to make 10%? So now that I got my capital back, that's great. I got my capital. But now I have to go look for something else where I can make 10%. So if I could do that every month, I would choose that over a stock that just flies and goes and grows 100 or 200%. Because if I could do that every month, that's more consistent, that's more sustainable, something that I can control, something I could do on purpose. But finding stocks that fly 200% is not going to happen all the time. And it takes time. I might have to wait, but at least generating 10% on purpose every month would be amazing. So I got my capital back, but now I just have to find opportunities. Right now I've got Rocket it's just a covered call that I'm going to keep rolling. I bought it at 21.6. It's trading at 19.6. The last call I sold was December 18 at 21.5, collected $1. It's trading for 41 cents. So slightly profitable on the covered call. I think I'm going to wait till close to December 18 when it's trading at around 10 cents, and then I'm going to roll it unless Rocket decides to fly. So I'm just going to keep rolling it at the same strike. And Virgin Galactic looks like I'm going to be out of it soon because, as you can see, it's flying. So my covered calls are going to be in the money soon. There's not going to be any time value. And I don't think I can roll it for a decent credit. So my next expiry is January 15th. So I still have a while to go, 39 days. So I think I might have to get my capital back on this one. We'll see. Still have time. And then in my RESP, I've got covered calls on Intel. I bought it at 56. It dropped all the way down to 44 at some point. Now it's back up to almost 52, so that's good. But I think as soon as it hits 56, I'm gonna get out of the trade. I've got a covered call on which expires February 19. Now look at this covered call. I sold it for 57 cents. It's worth $1.90. So if I had bought the call instead, if I was playing options and just buying calls, if I had bought this Intel call for 57 cents, I could have quadrupled my investment. So that's interesting. Might still be an opportunity in Intel because, I mean, it's at 52. It's definitely undervalued. AMD keeps crushing it by taking market share. But yeah, I guess if you like buying calls and you want to take the risk, I think Intel could be a good position. It was way better when it was trading at 44 for sure. Hopefully it doesn't get destroyed next earnings again. I mean, 2 earnings in a row, I think it drops 10%, which is a lot. So yeah, so this was a stock market portfolio update with Questrade. So if you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.